Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. Wall Street indices extended gains for the second week in a row amid rate cut expectations and mixed but positive corporate earnings. Despite the elevated service sector inflation, investors continue to believe that additional rate cuts are likely in the near future, driving the benchmark indices to new highs. Rate cut expectations dominated investor sentiment in Europe, and in China, investors are hoping that Beijing will soon announce its plan to implement fiscal stimulus. On the economic front, existing home sales rose 9.3% to an annual rate of 4.24 million in December, confirming growing momentum despite elevated mortgage rates. Median home price increased 6% from a year ago to $404,400, the 18th consecutive month of annual price increase and the largest rise since October 2022. Despite the solid rebound in the fourth quarter on an annual basis, for the whole of 2024, existing home sales declined to 4.1 million, the lowest level since 1995, while the median price reached a record high of 407,500 in 2024. In Europe, passenger car sales edged up 0.8% from a year ago to 10.6 million units, and the battery-powered vehicle market share hovered near 14%, as more consumers prefer hybrid vehicles than battery-powered vehicles. In other economic news around the world, private sector business activity unexpectedly expanded in the Eurozone in January. The Norges Bank held its policy rate steady but signaled rate cuts are likely in the near future. The People's Bank of China held its one-year medium-term loan rate at 2%, and top financial regulator asked insurance companies to increase their stock purchases using premiums from the new policies. The Bank of Japan raised its short-term interest rate by 25 basis points to 0.5%, the highest in 16 years. Japan's consumer price inflation accelerated for the second month in a row to 3.6%, paving the way for additional rate hikes by the central bank in the future. Moreover, Japan's exports and imports increased in December, confirming steady increase in demand from the ASEAN region and India. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered near 4.8%, and worries about the resurgent inflation ahead of possible tariffs on imported goods dominated the sentiment. Texas crude oil price edged lower by 4% to $74 a barrel and halted 4 weeks of gains amid demand growth worries, and India and China finding ways around the latest sanctions on Russian energy shipment. Natural gas prices in Europe advanced 12% to 50 euros per megawatt hour after storage levels dropped to 59% amid a supply halt from Russia and severe cold temperatures in some areas in the region. The euro rose to $1.05 ahead of rate decisions next week and a weakening U.S. dollar. The yen strengthened to 155 against the U.S. dollar after the Bank of Japan raised interest rates by 25 basis points to 0.5%, the highest since 2008. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite extended rally to the second week amid optimism about economic growth and weakening of regulations for energy and banking sectors. European markets extended weekly gains ahead of the widely anticipated 25 basis points rate cut next week. The Nikkei 225 stock average jumped nearly 3% as investors adjusted to the Bank of Japan's rate hike and expectations of faster inflation in 2025. Hong Kong and China indices diverged after China's top regulator asked insurance companies to increase investment in onshore stock markets. Indian market indices extended losses to the third week in cautious trading ahead of the release of the union budget next week. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Boeing Company said fourth quarter loss is likely to be close to $4 billion, nearly triple the Wall Street estimate, as the company struggles with the production quality crisis and the effects of West Coast factory workers' strike. American Express, the charge card company, posted record revenue in 2024, and fourth quarter revenues were boosted by strong holiday shopping. Texas Instruments decreased 5% after the advanced semiconductor company's current quarter earnings outlook disappointed some investors. Railroad operators CSX and Union Pacific reported diverging results in the fourth quarter. Electronic Arts plunged 12% after the video game publisher estimated lower than expected revenue in the current fiscal year. GE Vernova and GE Aerospace, or General Electric, posted strong quarterly results. Alaska Air estimated the current quarter's loss to shrink on robust travel demand. Charles Schwab said fourth quarter revenue increased 20% and net income soared 76% from a year ago. Netflix advanced 2% after the streaming service provider reported record client subscriptions in the fourth quarter, surpassing the total about 300 million. United Airlines Holdings surged 3% after the airline reported strong fourth quarter financials. Burberry Group, a luxury goods retailer based in the UK, said fiscal third quarter sales decline was lower than expected thanks to a rise in comparable sales in the US. Ericsson AB missed sales expectations amid weak sales in India. In the week ahead, investors are looking to review a flood of earnings from leading global corporations in the U.S. Microsoft, Meta, Apple, Tesla, IBM, Visa, MasterCard, ExxonMobil, Blackstone, and Caterpillar are some of the leading companies scheduled to release their earnings. The U.S. federal funds rates range steady between 4.25% and 4.5% after three consecutive rate cuts in 2024. Investors are also looking forward to the preliminary estimate of the GDP growth rate in the fourth quarter. In Europe, investors are looking forward to the release of corporate results from Louis Vuitton, SAP, and ASML. The European Central Bank is expected to lower its policy rate by 25 basis points, but the Sweden's Riksbank may pause after lowering rates for 3 times in a row. Investors are also awaiting the release of GDP growth data in the Eurozone, Germany, France, and Italy. Moreover, Germany's retail sales and Switzerland's foreign trade data are likely to garner headlines next week. China's Statistical Bureau is set to release business activity survey before the start of one-week-long New Year holiday period. Japan is set to announce its monthly updates on industrial production, retail sales, jobless rates, and housing starts data. In addition, Tokyo area CPI update may provide clues about the timing of the Bank of Japan's next rate decisions. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you